Welcome back. Well, Gemfields has released its interim results, revealing a challenging first half marked by lower ruby output, civil unrest and suspended mining operations. Despite these hurdles, the company has made strategic decisions to streamline its organization and bolster its balance sheet. And joining me now to dive deeper into these results is Gemfields CEO Sean Gilbertson. Thank you so much for your time, Sean. Now, lots to talk about here, but just, zoning in on the numbers, the financial metrics did take a knock from the top line all the way down to the bottom line, where we saw you swinging from a profit to a loss. How much of a headwind was the macroeconomic environment for the company?
Pleasure to speak with you, Zanati. Look, the macroeconomic environment certainly was not helpful. So China's luxury consumption has effectively been offline for the last year, and many of the international luxury groups have suffered as a result of that, as did we. However, we are delighted to see some green shoots starting to emerge over the last couple of months. And of course, the Chinese stock market is sitting near a record high. So hope springs eternal.
Yeah. And it's actually quite interesting. I mean, you highlight these external factors that are affecting everybody in this landscape, but also just zooming in internally, your production did surprise to the downside in both Mozambique and Zambia. What have been the main headwinds of that performance?
So if we look briefly at Zambia, we actually ceased mining operations between January and May of this year. So no mining at all. We continue to run the processing plant, however, and that was really driven by two things. The first was the fact that we had a competitor last year that had dumped a very significant number of emeralds on the market, doing quite a bit of damage to the market, which has taken some time to recover. And then in addition to that, at the beginning of January, the Zambian government also introduced by surprise a 15% export duty, which obviously meant that we didn't want to export any emeralds, and that in turn cut us off from emerald revenue. So that was problematic. And then across the way, moving to the east in Mozambique at the Montepuez Ruby mine, we've obviously had difficulties over the last few years with the insurgency there. We also had significant civil unrest following the disputed general election last year, and that led to a very significant influx of illegal miners in January, February, and March. And we also suffered from a decline in the number of premium rubies that we were able to recover. So it's fair to say we've had a set of circumstances over the last 12 months, which I sincerely hope I will never see again in my career.
Yeah, well, actually, I was going to ask about that because, I mean, you talk about these specific periods where you experience these very specific challenges. And I'm wondering then, how do the market conditions look like? For example, in Zambia, how's the competitive landscape? And of course, I know that the government has rolled back on that export duty. But also even in Mozambique, with that political unrest and the insurgency that does not seem like it's ending. But also, I mean, looking at illegal mining, are those things that are continuing, or maybe that you are navigating better at this point? So really, how are the market conditions currently looking?
Those are obviously all pretty specific to our operations, and I am pleased to say that for now, on most of those fronts, things are certainly better. So the civil unrest in Mozambique has calmed down very dramatically. The amount of illegal mining that we're seeing is reduced from about 1,000 people a day to approximately 350 people a day. And in Zambia, to your point, the fair credit to the government who managed to reverse that export duty in approximately 60 days, which I think is truly remarkable. And our competitor also seems to be taking a somewhat more responsible approach to the market. So for now, the operating base and footprint is certainly in a happier place. And as our most recent emerald auction results showed, the market, specifically for Zambian emeralds, was super strong. So I hope that the next 6 to 12 months see some much happier news coming out of us.
How are your costs looking? Because, of course, a miner's cost base is an important metric that investors do keep a close eye on. What are the biggest influences for your operating costs at this stage? I do also note that we did see a significant softening in those operating costs.
Yes, we've managed to take over the course of the last 12 months probably 20% of the operating cost of the business out of both mining operations. And so the Montepuez Ruby mine has come down from approximately $60 million a year of OPEX to a little bit below 50. And across the way in Zambia, it's come down from about 55 million to, we hope, sub 50 million by year end. And there have obviously also been some corporate cost savings, but by far and away, beyond, of course, the salaries paid to all of our colleagues in those countries, where we've not made mass redundancies at all. In fact, in Zambia, we sent our colleagues on forced leave. And then when we reopened the mine, we brought them back so people didn't lose their jobs insofar as our employees are concerned. But beyond that, obviously, the price of diesel is very significant, and that's exacerbated by power difficulties, access to the electrical grid and the reliability of those grids, both in Zambia and also in Mozambique. And then, of course, you end up having to run diesel generator sets, which is far from optimal, both from an emissions perspective and obviously also from a cost perspective.
Yeah. And as we're talking about, I mean, this cost picture, of course, your spending, I want to drill into your capital expenditure program. I do also understand that there's a processing plant project that you are busy with in Mozambique as well. So what are your capital expenditure priorities in the short to medium term?
So touching briefly on Kagem in Zambia, we upgraded that processing plant in 2024. So the bulk of the capital expenditure at Kagem is now completed. However, the project that has given us considerable indigestion whilst we experienced and navigated all of these contemporaneous problems was the very significant $70 million processing plant that's being built in Cabo Delgado province at Montepuez Ruby Mining. To put that in context, the size of that project is about half of our market capitalization. And it's taken about 2 years to build. We've had a wonderful contractor there from South Africa called Consulmet, who I think have done a remarkable job to date in very difficult circumstances. And I am very pleased to share with you that earlier this month, that processing plant actually did produce its first rubies. So all the key components are now running. We're still finalizing some of the SCADA controls that integrate the various components and optimizing those. But with a bit of luck, we should have full completion during the course of next month. So that was very considerable capex for Montepuez Ruby Mining. And that profile will come down dramatically in 26. In around about 2027, there'll be a little bit more capex as we potentially add some yellow goods, namely the big yellow trucks, in order to increase the amount of ore mining that we need to do in order to feed this new and very hungry processing plant, which is a 400 ton per hour plant. We've got a present plant of 200 tons per hour, and therefore we'll be tripling our processing capacity at Montepuez Ruby Mining, which is very important for increasing the amount of rubies that we can produce. Also, the variety of different rubies we can produce from different areas on the mine. And once we've tested those areas, we'll also be able to add those to the life of mine, thereby increasing the resources and reserves for Montepuez Ruby Mining over the next couple of years.
Sean, I looked at your margins and they are in a painful state. What is going to give them a lift?
Yes. Well, first things first, we've got to get the second processing plant at MRM up and running. And that's going to really make a very big difference to MRM's margins. MRM normally has an EBITDA margin of somewhere between 50 and 60%, so it should be very healthy. Across the way at Kagem, we normally expect to see 40 to 50% EBITDA margins. And because of the suspension of mining earlier this year, we are presently only running at 1/3 of Kagem's capacity, about 6 million tons a year of rock moving versus capacity of 18. And we'll gradually ramp that up depending on how market conditions develop. And so 2026, Anati, I think you'll be much happier about our margins.
Okay, yeah, I'm hoping that's going to bring a smile to my face. Something that was really interesting in terms of obviously how you're bringing in money through your auctions was how you do your auctions. Of course, you know that there was a big change because of COVID-19, where you now had to do online auctions compared to the traditional auctions that you used to do. Have you experienced a structural change in how you conduct auctions, or are things back to normal, back to pre-COVID at this stage?
So the principal shift, as you point out, from pre-COVID to post-COVID in the auctions was that pre-COVID, we used perhaps the somewhat prehistoric approach of giving each of our customers a bid book, an A4 bound bid book, and they would write all of their bids in that bid book at the end of the auction, put it in an envelope and drop it in a box at the beginning of the auction room. And we would then quite literally, a team of us, a committee, sit around the table and, if you will, count the money, which in some cases was quite rewarding. But of course, that process has been supplanted now, post-COVID, by online bidding. So the customers still get the bid book because sometimes that's easier for them to make notes when they're sitting at the auction environments. And before the auction deadline, they log on to a very good system that's been specifically customized for us that allows them to place those bids online. And of course, the advantage of that is you get instantaneous results and it's much quicker feedback to the customers. And also in the past, we used to, at the end of the auction, make an announcement in the auction room about which schedules or which lots were won by which customers. Post the COVID period, that information doesn't actually get out into the market. In other words, it's not possible for customers to see which lots went to other customers. And that's actually been quite well appreciated by our clients. Very importantly, we pioneered the approach of government supervision of our auctions. And so in this revised model, we do still have government representatives who join us online and actually look at what that final bidding looks like and what the results are. They participate in our board deliberations so they can hear the board approving the sales. And that means that everything's done very transparently and the governments know precisely how much money should be going back to Mozambique and Zambia.
All right. Well, I want to drill into your balance sheet because you did implement a rights issue early on this year. So what level of health is your balance sheet in, but also what steps are you taking to ensure that you protect it so that you don't get to a place where you have to, again, tap your shareholders for funds?
Yes. So fortunately, it's a much more comfortable question to answer today, Zanati, than it would have been 6 months ago. 6 months ago, things were looking pretty bleak with all the problems we were grappling with. I think the important context is that between May 22 and May 24, Gemfields paid out $80 million in dividends to its shareholders and also did a $10 million buyback. So that was $90 million of cash that went out to shareholders in the post-COVID luxury boom when we had a lot of money. We did not see the downtrend coming. I think that probably applies to many other businesses. And with the various issues that we encountered, we suddenly found ourselves short of cash. And so we effectively had to go back to shareholders cap in hand in June of this year to say, could we please have $30 million of that 90 million back in the tank? Some 82.5% of our shareholders did support that rights issue, which was tremendous underpinning. And so that was step one in bolstering the balance sheet a little bit. And then obviously step two was in August, we signed a sale and purchase agreement to sell the wonderful Fabergé brand for $50 million US. And so after those two transactions, and with the pickup now happening in the emerald market and our emerald production, combined, of course, with a second processing plant in Mozambique, I sincerely hope that our balance sheet continues to go from strength to strength.
Well, as you also highlighted the sale of Fabergé, in terms of your strategic positioning then after that disposal, where does Gemfields stand in terms of, I guess, a strategic identity?
Yes, so Fabergé played a very important role in the marketing of our emeralds and rubies over the course of the last 15 years. I'm personally very sad to see Fabergé sold, but such is life sometimes. And Fabergé obviously was borderline regarded by many as being a non-core asset for the Gemfields group. And so with Fabergé now sold and that transaction completed, and also our ceasing of work on our Nairoto gold deposit, which was to the north of the Montepuez ruby mine, where we found about 105,000 ounces of gold mineralization, which is now in the indicated category under the JORC code in what is an economically mineable deposit. We're not going to be taking that project forward. We've shed Fabergé, and therefore that leaves us with our long-standing core strategy, which is to be an Africa-focused miner of emeralds and rubies, together with, of course, the appropriate marketing.
All right. Well, I mean, mining of precious stones also has been in the spotlight, and particularly with, I guess, the emergence. I mean, they've always been there, but I guess now there's a specific focus on lab-grown diamonds. You also have lab-grown colored gemstones, emeralds and rubies. Are these a threat to the mined colored gemstones in any way, and do they affect pricing on any level?
It's a great question, and I am pleased to say that both the emerald and ruby markets have seen this movie many, many years ago, and so our sector has actually digested and transcended lab-grown emeralds and rubies probably well before I was born. So to put that into context, the first lab-grown rubies came about in the 1890s, not the 1990s, the 1890s.
Wow.
And if you Google Geneva rubies online, you'll find that entire story. But very quickly, the amount of lab-grown ruby increased dramatically. They became bigger and bigger, better and better, and of course, cheaper and cheaper.
Yeah.
And so the market bifurcated into a market for natural earth-made rubies and lab-grown rubies. The same thing happened some decades later with emeralds.
Yeah.
And you can go onto many of the online platforms this evening, if you wish, Sonati, and you can buy a really big lab-grown emerald or lab-grown ruby for a couple of $100 US, whereas the earth-made equivalent will cost you tens of thousands, if not hundreds of thousands of US dollars. So it's an old story for colored gemstones. We don't worry about it in any way, shape, or form, and we believe we're already seeing the same movie play out in the diamond business. That market is bifurcating, and the lab-grown diamonds are already becoming very inexpensive, and that process will continue. So we think there's actually still some life yet in earth-made natural diamonds over the course of the next 5 to 10 years.
Well, thank you for educating us there, Sean. Really appreciate it. But now we need to get into a movie that we have not seen, and that is, but you are preparing for, and that is the second half of the financial year. You say that your approach to the second half is cautiously optimistic. What story is that tone highlighting?
In essence, it's the recommencement of mining at the Kagem Emerald Mine, which started back in May, and we're gradually adding some further production points. We've obviously also had super news from Kagem's most recent emerald auction, which tells the market that we've had some bumper production coming out, and long may that last. Certainly the market's looking very solid. Feedback from our customers is good. We've got the second processing plant in Mozambique coming on stream. Chinese stock market sitting at an all-time high. It looks like there's a little bit of heartbeat happening there. And over recent weeks, the share prices of most of the big luxury groups are up quite significantly also. And there are a couple of really standout examples. Whilst they are mostly a gold jewelry producer, one of the world's biggest jewelry groups is called Chow Tai Fook. And they have approximately a market cap of about 15 billion US dollars, a very big group. But their share price is up around 150% over the course of the last 12 months. Wow. So they're perhaps a little bit of an outlier, but even the big diversified luxury groups have improved quite a bit. And so depending on what happens with tariff-related matters and any other systemic shocks, we have a gut feeling that things are moving in the right direction. It can't be guaranteed, of course, but all the pointers seem to be heading in the right direction at the moment.
Well, we do have to wrap up the conversation there, but thank you so much for your time and giving us insights on your latest numbers, Sean, but also the broader landscape that you are operating under. That was Gemfields CEO Sean Gilbertson.